everyone's doing well. Just doing some evening analysis here on the pound yen on the daily chart. I just got a couple of trade ideas that I wanted to share with you. So you've got time to look at them yourselves, analyze it and see what you think. So they are a couple of pattern trades to start on the daily. So I'm going to grab my fib tool. We're going to go swing low to swing high, move down into the 50%. That meets our requirement for the bat pattern. So we have a bat pattern X to A to B, B to C, and C to D, completing down at the 88.6 at 177.23. So if price moves down to this level, we've got a potential bullish bat pattern on the cards. And then if I just scroll over a little bit and fatten the chart up, we go again with our Fibonacci tool, swing high to swing low. We move up, requirements for a bat pattern completed there at the 50%. We move back down, we don't break the A leg. So yet again, if I draw it out, we've got an X to A to B, B to C, and C to D, completing at the 88.6 again at 193.58. So we've got two patterns. I can just change the color for you quickly. There we go. So we changed the color on the bearish bat pattern. So we've got two opportunities for you daily traders. You can check it out yourselves, analyze it for yourselves. We've got a bullish bat if price moves back down and breaks this structure level here. But if price continues up to move higher, we've got a bearish bat pattern up at that level of minor structure there. It's quite an interesting one. It completes at the minor structure pretty much exactly, which is a little shelf there, little shelf there. Nothing too much to be concerned with, but it's just interesting to note how price completes at the minor structure levels plus the bat pattern completion. Either way, moving on, something that I am looking at and I've just gotten involved with that I wanted to share with you. So I'm going to go down to the 240 chart, scroll this up a little. Something that I noticed was, if I grab my trend line tool, I just draw this channel in here. I think you can probably all see it already without me having to do so. I'm going to draw that in roughly there. Right, so clearly see the channel, little false breakout there, move straight back in, and we moved up, and now we've come down, we've broken out. And if I fatten up this chart, so we've broken out the channel to the short side. Now within here we have another pattern, and I eyeballed this a while back, X to A, moving down into 38.2% Fibonacci retracement level. That meets our requirements for a Cypher pattern. So if I grab the Fibonacci Extension tool and we go swing low to swing high and back down, and price comes up and touches the 127, it's what we need for our Cypher. So if I go ahead and delete that, and let's draw that one in, and we go X to A to B, B to C, and C to D at the 78.6 level down there. I'm going to move that because I think it looks better, like that. It was a little bit ugly having it drawn down there. Now I identified this pattern. I was waiting for it to come down, see if we could get a completion. The problem with it was, for me, my stop would have had to be below X as normal. Now this structure level here, I'm just going to use my pointer instead. Okay, the X leg, the beginning of the pattern starts here. I need to be below that structure level. Now looking to the left, we have a nice shelf of structure where price has tested it numerous times. Now I didn't want to be sat just under the X leg and have price come down to test this level here. So I wanted to be sat just under that level as well, and it was too much risk for me to be actually entering in on the decompletion of this pattern. So I couldn't enter. So I was having to look for an alternative entry. So what I've done, I've been patient, I've waited, I've not tried to jump into the trade. And so what I did, I drew my line on there, and what I got was an indecision candle. As soon as that closed, I got long, because I would have been in the pattern anyway. The only reason I wasn't in the pattern is because it was too much risk. So now my risk looks like this. So we get that tomato, tomato, so we know that's our risk. So I've got my indecision candle. I wanted to get long as soon as I saw that candle close. I measured out the risk. I get myself below the X leg. I get myself below this structure level here, which is also, if you'll notice, the 84 even handle. And we all know that price is drawn to those even handle numbers. So I needed to get myself below there. Now targets is a Fibonacci retracement, and my target ones are the 38.2 and target 2s at the 618. So I've got those here. Right, so what's my risk to reward? Can I make this work? There we go, target 1. And I've got target 2s up there. So clearly in my favour for the risk to reward. Also, you notice the 186 even handle again, coming in at structure, a shelf for structure there again, structure over here. So aside from the fact that the 38.2 is my target 1 level anyway for these patterns, but also adding the even handled number plus the structure that is across here gives me more confidence that that's where price is likely to get to. And in actual fact, I've got my target ones a little bit below that number because I want to make sure I get filled. So I hope you've enjoyed the video. Giving you a little bit of analysis on why I entered into a trade, even though I didn't get in at the decompletion point. I needed an alternative entry reason, and that indecision candle was it. The risk to reward worked for me. Not only that, we've got our two potential trading ideas, a bearish back pattern and a bullish back pattern, depending on which way market decides to go. So it's something for you to take away and analyze for yourself. I hope you enjoyed the video. If you did, give it a like. It's a way for me to know that the content was good. And I look forward to seeing you guys on the next video. Take care.